Hello everybody and welcome back to the channel. Welcome back to the dividend capture strategy. This is week 1. I'm going to show you guys kind of what we've done in the first week and see how it's going so far. So as you know, this we're buying one stock every day that before their ex-dividend date, preferably 5 days before the ex date. Sometimes, with weekends and other things, it doesn't work out that way, and today being the holiday, kind of messed the exact 5-day stuff up. But anyways, we're going to hold them through the X date and sell them 5 days after the X date and see how it goes. And this is a low budget, so we're only doing $100 per stocks for a total of $1,000. And so far you can see that we've bought Bank of Nova Scotia, Bank of Columbia, a sustainable infrastructure company, this investment group, and Upbound, whatever. I'm not 100% sure exactly what these two do. But anyways, they've got good dividends. They've got good growth projections. So anyways, so this is what we've done so far this week. As you can see, yesterday was a pretty good day. Made $3. We're up $3. Didn't make it till you sell it. As you can see, some of my positions are doing pretty good. So we're up a little bit of money. As you can see, our total gain is actually down 77 cents. And the only reason why that is because Bank of Columbia, their X date is today. So they adjusted the price down by the dividend. And the dividend, we're actually, let's switch over here and see. So the actual payout is going to be $2.62. And as you can see, they reduced the price by $2.62, but we were up on the position. As you can see, it says we actually were today, or yesterday, we were up 43 cents. So that adjusted down. So, if the stock had been flat, this would be negative $2.62, but we were actually up on the position, so it's down $2.45 overall. And so that's part of the strategy. That's what kind of makes it tricky, is that they drop the price of the stock by the dividend amount on the X date. So that's why we're buying 5 days before. So hopefully we have some appreciation up to the X date. They're going to knock it down. And hopefully we'll have more appreciation 5 days after the X date. Of course, it can work both ways. It can go up and go down. Just all depends on picking good stocks that have short-term upside. And we'll see with this CPE coming back higher than what they were expecting. We'll see what happens on Monday. I'm hoping, these are two banks. Interest rates going up is good for banks. They make more money unless they have a bunch of low interest loans, kind of like what happened with Silicon Valley Bank, and then they go under. So hopefully, this being a Canadian and Colombian, it has some effect on them, not as much as if these were U.S. banks, but we'll see how it goes. But as you can see, we're, Bank of Nova Scotia, we're up 1%. This sustainable infrastructure company, we're up 1%. These are down, not very much. But yeah, we'll see how it goes. It's going good so far. We're up a little bit. And, as long as we end up even whenever we sell it. So say we bought this for $35.08. As long as we sell it for $35.08 or more, we'll come out even on the buy and sell side, but we'll capture the dividend. So we'll make that $2.62, which doesn't sound like a lot because it's not, but that's 2.6% return over 10 days. That's a pretty good return. So anyways, that's what we're doing. You can see, you can switch over to the dividend view, and you can see the dividend amounts. So this Bank of Columbia is paying 9.5%, 6.1%. Bank of Nova Scotia, this TWO is 13.6%, and Upbound's 4.23%. And actually, this cash money market is paying 4.95%. I actually got a dividend of 57 cents and 8 cents from having that money in the money market account. I wasn't really accounting for that. So, hey, that's extra money. I mean, that's a half of, on $1,000 in there, that's Not very much, but it's only been in there for a couple of days. But anyways, so for this coming week, we've got some. These are our companies for this coming week. UVV, TD, which is another bank, Verizon, ACN, I'm trying to think exactly what that is, and CBRL. I'm not 100% sure, but as you can see, they'll be paying out $1.50, $1.71, $1.66, 0.38 cents, and $1.97. Yeah, so as you can see, these are going to be paying out about 2%, about 1.6%, 1.7%, 1.58%. So got some pretty good percentages returns just on the dividend, and we'll be keeping track of everything. Here I've made like a P&L to keep up with when I bought the stocks, or when we sell them, our purchase price, number of shares, our sale price, price appreciation, which will be of course the purchase price minus the sale price, and then the dividend amount. We'll add the appreciation and the dividend amount to get our total gain and loss and our percentage. So we'll see. Of course, all we've done is we've bought these 5 stocks, so this will be built out, and I might add some different metrics and stuff to it, so we'll see how it goes. But yeah, so this is what we're working on, and let's do some research. You can see we're back here on tip ranks, where we have our dividend calendar, where you can see everything that's coming up. So now I've got Seeking Alpha open to do a little bit of research. Anyways, all right, so the next stock we're going to be buying is Universal, which they should be purchasing on the 1st, which is here. You can see there's a bunch of different stocks coming up on the 1st. Is that right? No, that's not right. We're buying on the 1st. The X date is on the 5th. Sorry about that. So this will be the 5th. Yeah, there it is. Universal. All right, so Universal is paying a dividend of 6.34%. That's Universal Studios, like theme parks and stuff. And of course, there's more that are paying higher dividends. There's actually a lot of really high dividends, like this one, Keenon, 50%. Whatever that is, that's probably not. Yeah, their dividends are all over the place, so I would not be in that. So what we're trying to do is pick out good companies that pay good dividends. Like this Main Street, I would have done that one because I know that's a very strong company. But they pay monthly dividends, so not quarterly. So this 6% is divided by 12 instead of divided by 4. So your actual yield trying to do a dividend capture is not very good. So as you can see on Universal, they're down a little bit for the year, but they've fallen quite a lot from their highs just at the beginning of the year. So there's a lot of upside to this, a lot of possible upside anyways. So paying 6.19% on their dividend, and that's kind of what I'm looking at. Is let's see how they're doing year to date, down 23%, not very good. But you can see it's flat and starting to trend back upward. See what the 1 month is. Pretty flat, but an upward trend. So after that, we've got TD, which is another bank. A lot of bank stocks we've been kind of in, and we'll be buying that on Monday, April 8th. As you can see, all these other ones. And let's see, where's TD? Right there, 4.84%. They have the highest dividend. No, actually this does. Second highest dividend that day, but as you can see, it's quite a bit of upside. They've got a moderate buy, all the analysts do, and you see year to date, they're down 6.5%. They've been pretty flat. We'll see what PCE does. Maybe we can catch them down after this PCE and get a pretty good price on it. Give us a little bit of a higher yield on it. And then Verizon is our next one. 6.45%. Verizon is a dividend king. They've been paying dividends forever, but it's kind of a dividend trap because they have a high dividend, but they have virtually no dividend growth, and the stock price is very flat to negative. As you can see, the 5-year is $54, trading all the way down to $40. It's very flat. Even the 10-year, very, very flat. So Verizon pays consistent dividends, but there's no growth, and that's the trap with Verizon. So this will be a good one to capture. Good, strong company. Really flat line. So let's see, go to the next one. ACN. That's Accenture PLC. We'll be buying that on Wednesday. And, they have a lower dividend, but it's also a extremely expensive stock, $346. We're not even going to get to buy a whole one. But you see their year to date, they're down just a little bit. They really fell off right here. They really fell off last week. So it's going back up a little bit. So this will be a good one, 1.49%. It's not a whole lot, but lots of upside, 14% upside. They got a moderate buy on it. So that's what we're looking for, something with upside in the short term and a good dividend. So the next one is CBRL, which is Cracker Barrel. I didn't even know Cracker Barrel was a public company. Let's see, CBRL. I keep missing these. There it is, 7.5% dividend. It's got a little bit of upside. They've got a hold rating on it. It's not the highest dividend, but it's a pretty good one. Restaurants are doing pretty good. Stuff's come. Food prices have leveled off quite a bit, but as you can see, they're down quite a bit. 35% down in a year to date. Down 5%. Let's see what the last month has been. So last month they're up 7%. So you can see they were starting to come back up. So hopefully we'll be able to capture some of that upside in between the dividend buying and selling. So that's what we're doing next week. But anyway, so if you want to stick around, we're going to keep doing this. We're going to fill this chart out as more and more. As it gets closer to the date, I'll start doing more research and putting more stocks in, but we've got it filled out pretty far down the lines. Like the video, subscribe to the channel if you want to keep up. We're going to be doing weekly, couldn't do daily, weekly updates every probably Friday or Saturday on how things are going, and we're going to see how this dividend capture works. I mean, hopefully it comes out pretty good, but yeah, we'll see. So stay tuned. Have another video coming out next Friday or Saturday, and I'll see you then. Thanks for watching. Bye.